Welcome to GBPJPY weekly recap. This is for I don't even know what week it is. It's the second week of March. Essentially, we had three solid high risk reward setups. Other than that, a lot of what happened early on in the week was price setting up. So what we saw happen was March 8th was Monday. Excuse me. Price pushed up, pushed above this daily supply zone that we had, right? And then it formed a high, an intraday high at 151.200. So it pushed up. There's no real good setup until then. And then what started happening was you see how price stayed above this supply zone, kept rejecting 151.6 area above 151.5. So this consolidation that was going on right here was essentially just for a push up. We're consolidating more orders. This was an accumulation. And then on March 10th, what happened was price broke above, retested, and pushed up. Pushed up, created a higher high. So we know that we just got a break out of this intraday consolidation accumulation area. So bullish momentum was strong, right? We just consolidated for 2 whole days. And now this break up was indicating bullish continuation. But as we know, that the fact that these are yearly highs, we haven't been to this area since 2018. So it wasn't logical for, I'm just going to remove these 1 second. So it wasn't logical for, if you think about it, price to continue up from here. And this was London, this was pre-London, right? So there's no reason if we play it back right here, okay? So when price reached here, you don't want to be buying here, although there's minor structure here. That's why we wait for price to reach higher time frame levels, because the majority of the time it's going to get there, right? It just depends on being patient, right? You may say, okay, but there's 151.500 and you've told us that these levels work fine. Yeah, but these levels work great when they're aligned with higher time frame market structure. Here, there's no higher time frame market structure. Yeah, there's price activity here, but that's also lower time frame price activity, right? Versus what we see here, higher price activity at higher time frame levels, right? So when you wait for that, it increases the probability of that trade being successful in your behalf, right? So what you start seeing happening in lower time frames here, especially, is okay, we topped out, right? We're kind of creating lower highs, consolidating. So see what happens. Okay, this is London, almost near London Open, lower highs. We reacted to 500. This doesn't mean it's a buy. Why? It could have just as much gone up from here. But why is that unlikely? Because look at the range, okay? Let's say somebody wants to buy here. Their range for that clear buy is 18 pips, right? So when you're thinking about it, it's highly unlikely that large amounts of orders are going to come into the market when the range is so small, right? So, and then we know market going to do its liquidity move, right? Push down, boom, initial rejection of 200, bought here, bought there. I got stopped out right there. My stop loss was 1.7. I got stopped out right there. But what I failed to take into account was my stop loss placement was a little ignorant due to I didn't fully pay attention to this level. But as you can see, market did make its way back down to previous market structure, right? Made its way fully back down to previous market structure, still this area. And you see it tapped the most recent one, although we had our level at 0.200 because it's a nice rounded number, right? And we know GJ loves the rounded numbers. Although we had it there, it specifically came down to the recent market structure at 151.15, right? It came down here, and let's start seeing what happens, all right? So we tapped here, look, this area. And if you go into lower time frames, 1 minute, okay, initial rejection, we close back above here, this low, right? Close back above. Price is creating higher lows, as you can see. right? So once we were to like break above here, now we're thinking, okay, we're gonna do something like this and if eventually make our way back up here. Why? Because that's our range. Now our range went from over here being 15 pips to now being, 18 pips to now being over 1.100, like 50 pips, right? So that increases the probability of that trade going your way because you want to buy low, right? You don't want to be buying at a high like that, especially at a yearly high. 2018, we haven't been to 152. So now that we're there, so in this case, it would have been, it's okay that I bought here, but what didn't work out was my small stop loss. What I had it as was I had a stop loss below this wick, 1.7, when it should have indeed been below the structure, right? 8 pips. That would have still guaranteed a high risk reward, right? 1 to 6. Sorry, I just have bad allergies every fucking month of the year. So we'll fast forward this a little. Eventually, price reached there, right? And it reached there at 9 a.m. Eastern, so an hour after New York open. But as you can see, the move, I say this all the time, the move started in London, New York, pre-New York did consolidation. This is essentially reaccumulation for a push up, and we pushed up and filled the range. This is why I don't really like New York, because New York either continues the move or does some shit like this, right? And when New York continues the move, the range, again, now the range is again 20 pips, right? So it's not worth it. That's why it's important to get in on these moves when they start rather than impulsively entering 30 pips after the move has started, right? So I got stopped out. I could have re-entered, but re-entering doesn't really do anything for the long term, right? Do you want to be doing the same toxic shit in like a couple of years, right? No. So I decided to stay out. What matters is that it was still a high risk for its setup and that we waited for price to get here before entering, because the amount of people probably entering here when they saw London Open reject this area is probably a lot, right? And you can see like that's what these wicks are. Every time you see a large wick, 1 second. Every time you see a massive wick, think about it in this way: it's people getting stopped out. So price push down here, push straight to market structure, perfect retest, higher low created. This move down was a liquidity move and push up. Now we got a solid high risk reward setup, right? Where is it? Right there. Solid risk reward setup. 1 to 6, 1 to 8, and then we can start moving on. So that's the first move for GJ. First move for GJ, and I'm just gonna move this down here. Second move, you don't really have to count this, but pre-London, what we saw was price pushed below this low. We almost reacted to this supply level, not quite yet, but as you can see, we saw some selling pressure initially. So we saw some selling pressure, and then when I go back to that area, okay, now you know, look where price came down to. Although it broke below here, this minor structure, it tapped 800. And this is why it's important to watch how price reacts to these round numbers, right? So push down here, rejected, higher low, right? Create higher low created. So now this is telling us that we're rejecting 0.800, okay? Right here, we broke past this minor structure. You can see the wick retested here. This was proper buys here. This was proper buys, right? So now you know that this move down was just liquidity, right? Rejecting 0.800. Let's say you didn't enter at any of these. Then once we started closing above this level, look, same thing, retest, continue up, higher low. That's the second higher low now. Higher low, higher low. And then eventually we filled this range, and then we tapped the start of that higher time frame supply level, which was starting at 152.2. Once price tapped there, and this is something to pay attention to. I'm just gonna move this here. Okay, so this was the high, right? Since we're approaching a supply level, any price above this previous high that it rejected, so this previous high got rejected around 30 pips, any price above here is premium sell price, right? plus we're under a higher time frame supply zone that we haven't been to since 2018. So what we saw happen was price tapped it, and then let's just do a replay real quick. Okay, this doesn't tell you anything yet, but what this tells you is that we're pushing up into supply. So you're not going to be buying into supply, right? Okay, next minute candle. Okay, now this is starting to tell you something. Now we just got 2 minutes worth of rejection of this supply. 200. What starts happening next? 1 second. Okay, retest the level, more push down further. Oh, retested the level again. And now we make our way down. So in this case, here would have been an aggressive entry, right? And you don't always have to take these. A more viable entry, let's say, this would have been a perfect scenario if GJ did something like this and then came up lower high, right? Entries on here, because this is a safer entry, right? Over here is a little aggressive because you don't have that much information to be basing it off, but it really comes down to confidence and doing the same thing over and over. So you build that confidence and you know, okay, it's a supply level. You have all that information. We push above here, premium sell price. So there's a high probability that even if I enter here, it's going to reject, right? But if you're more on the safe side, then you can enter at the next lower high, wherever that's printing. In this case, price started creating that at this area, right? And we retested that for a couple minutes following, right, lower high. So any entries over here would have made sense too, because it's market structure, right? Now structure has shifted. This is an official confirmation that, yeah, market structure has shifted. We were making higher lows, right? Higher lows the entire time, the week here as well, right here. So when market structure shifted now, I'm just going to remove this real quick. And you can see that clear on 5 minute, right? You get a retest and market pushes down. Where can it push down to first? The structure right here, 140, 151.800. I'm so used to saying 140, but keep forgetting GJ's at 150. So push down here, and then eventually so at this point, we're coming into pre-New York, a little before pre-New York, but we see that consolidation, liquidity grab happening during pre-New York, right? Same thing over here. Look, we consolidated from 6 a.m. to 8 a.m. until New York volume came in, New York open volume came in and pushed price back up and filled the range. In this case, price pulled back a little, and then continued straight down. So there's a couple places you could have entered. If you're ballsy and you have big, massive balls, then you can enter up here at the rejection of this level, right? If you're looking for a little more safer sells with more confirmation, this is still a high risk reward setup. And in that case, for entries, you would just have to watch lower time frame to see exactly where to place your stop loss. So let's say you kept seeing this reject, you're like, okay, structure, it's a high possibility that we're going to sell off from here. So 10 pips, right, above 200, your take profit right there. Not the greatest risk reward, but you can see it's still 1 to like 4, right? It's not your 1 to 3, not 1 to 1. So that, over here, we closed below 152. So, and you can see lower high being formed. And it wasn't until price broke here, and then it created more lower highs, right? So you see how when price creates higher lows during a move down like that, that's a correction phase, right? This is market correcting. And then when we go back to creating lower highs, right, like here, it's time to continue back down. And then it continued straight back down to almost our level here, 200. It came to 2425. Nevertheless, as you can see, just level to level price action play, right? Rejected here, came down to this market structure from before, right? Broke this, came down to here, this general area. Although it wasn't as perfect, it didn't come down exactly to 200, but I still consider this a top of 200 because it's only 4 pips away, right? Market's not always going to move perfect. So solid move here too. I'm going to place the entry up there where 1 to 7, 1 to 8, And if you want to count this buy was also 1 to 8, but we'll just focus on the highest probability at the higher time frame levels. Higher time frame level, higher time frame level, right? So in this case, it was a little bit different because we knew we still had that range, and most likely this was a liquidity grab, move down to push up. So this move down was a liquidity grab for this move up, okay? But this move up was also a liquidation to enter buys in, to enter sells for the sell-off, right? Friday, we see that happening a lot on Fridays. And 4-hour structure just made a high, created a new intraday high, right? And it came back down to this 4-hour, just general 4-hour high time frame area. So solid, 2 high quality moves, right? Where was this? I had buys here. Didn't play out as good, right? I was expecting it to keep continuing up, at least till here first, but it took a couple more days. Took like another 24 hours for price to set up before we saw this move, another 24, 48 hours. But once price set up after, once the market set up, then we got clean plays, clean price action plays. If you left a runner, that's a solid 1 to 10. If you left a runner here, that's a solid 1 to 13, right? And that still counts as a high risk reward setup. Even the only thing missing is the lot size. Your position is a little smaller, right, on the runner. So solid moves on that. And as you can see, once we broke above this supply level that we had from earlier, it just pushed straight to the next one, rejected the next one, pushed down to the next intraday higher time frame level, 4-hour level. So yeah, solid week on GJ. That's it for the GJ recap. And join me in the next video.